Copart finally broke above its downtrend line and reclaimed the 50-day moving average. I already own about as much CPRT stock as I want long-term, but I still added more exposure. Not with shares. I used an option instead. And that creates the more important question. Why would I add more exposure to one of my largest positions when I'm actually trying to preserve cash because I think a short-term market pullback may be close? Before I show you what changed on the chart, here's where the portfolio finished the week. 1 week ago, this portfolio was worth approximately $130,300. Today, it's worth approximately $130,200. That's a loss of about $80, or roughly 0.1%. So basically flat. But this was one of those weeks where a flat portfolio doesn't mean nothing happened. Underneath that number, I had some big moves in both directions. And more importantly, I put $5,328 of new capital to work, while still trying to stay cautious. Welcome back to Precision Capital. This is the public record of every investment decision I make as I try to turn $100,000 into $1 million. Every decision is documented before I know how the market will end the story. My biggest contributor this week was CPRT. The stock position finished around $12,000. It gained approximately $800, or about 8% this week, and my total return is now around $1,300, or 13%. ServiceNow and Celsius also had strong weeks. On the losing side, Meta had the biggest impact. The position is worth around $8,200. It lost approximately $610, or about 7% this week. And I'm down about $500, or roughly 6% overall. Microsoft and Palo Alto Networks also moved lower. So that's how the account ended almost exactly where it started. Strong gains in a few names were almost completely offset by weakness elsewhere. But the more important story wasn't the final $80 loss. It was what happened to the opportunities in front of me. Before I show you the new trades I made, you can see here that I had 3 short-term cash-secured puts, PLTR, WAL, and CELH, expire this week. That means I collected 100% of the premium on all 3. Okay, now to the new trades. I made 2 purchases this week. First, on August 18th, I bought 1 CPRT January 2028 $22.50 call for $12.80. That's $1,280 of new capital. Second, I added to Broadcom. I bought 11 AVGO shares at $368, another $4,048. So between those 2 decisions, I deployed $5,328. And you might be wondering, if I'm still cautious about the market, why am I putting that much new capital to work? Especially when I already own about as much CPRT stock as I want. So what changed enough for me to add even more exposure? That's where I want to start. I already own 350 shares of CPRT. That's roughly 10% of this portfolio, so I wasn't looking to build a much bigger stock position. But when this setup started changing, I still wanted a way to participate. And with the amount of cash I have left, buying another meaningful block of shares would use too much capital. That's why I went with a deep-in-the-money leaps call instead. A deep-in-the-money call tends to move more like the underlying stock than an at-the-money or out-of-the-money option, while requiring much less upfront capital than buying 100 shares outright. So I'm treating the 350 shares as my core investment, and this leaps call as a separate trade on what I think could be a much larger reversal. Now, let me show you what made me take that trade. Here's the CPRT chart I recorded on August 18th, the day I entered the trade. First, look at the weekly chart. This orange line has been acting as resistance for months. Every time CPRT tried to recover during this decline, sellers showed up before the stock could really change the larger trend. You can see the pattern. Lower highs, another rebound, another rejection. And the downtrend just kept extending. That's why I wasn't interested in buying simply because CPRT had fallen a lot. A stock can look cheap and still remain trapped in a downtrend. What I wanted was for CPRT to finally do something it hadn't been able to do during those previous rallies. Break through that declining resistance. And this week, it did. This weekly candle has pushed clearly above the trend line. That's the first thing that got my attention. But one trend line break wasn't enough for me. I wanted confirmation on the daily chart too. Now, let's switch to the daily chart. And here you can see the second level that had been giving CPRT problems. The 50-day moving average. For months, CPRT spent most of its time underneath this line. When the stock tried to recover, that moving average repeatedly acted as another layer of resistance. But look at what happened this time. CPRT didn't just touch it. It pushed through it. And then price continued higher, above both the 50-day moving average and the larger descending trend line. That's important to me because now I'm getting confirmation from two different time frames. On the weekly chart, CPRT broke the downtrend that had controlled the stock for months. And on the daily chart, it reclaimed the 50-day moving average. Then there's the third piece, volume. Look at the volume as CPRT starts making this move. Participation increased as price pushed higher. That's what I want to see with a breakout, not just price drifting over a line with nobody behind it. I'm seeing stronger price action and stronger participation. So now I have three pieces of evidence working together. That's why I think this rally is different enough from the previous bounces to take the trade. Different doesn't mean guaranteed, but the evidence changed. And that's what I was waiting for. And you can see, since I entered the trade on August 18th, CPRT has continued moving higher. But if it reverses from here, breaks back below the downtrend line, and then loses the 50-day moving average around $29.50, that's where I'll look to exit. And that's only for the option trade. It doesn't change my 350 share long-term position. Now, if you take a look at weekly chart again, you'll see there's another major resistance level directly ahead. The 50-week moving average, around $36.50. CPRT is already getting relatively close to it. And when you look back at the chart, you can see how important this moving average has been historically. It has acted as a major trend level for CPRT before. So this is the next test I'm watching. If CPRT gets rejected there, then this recovery could stall. But if it can break through that level and hold above it, that's where I think the opportunity becomes much more interesting. Because at that point, CPRT wouldn't just be breaking a short-term resistance level. It would be reclaiming another major piece of the longer-term trend. And that could potentially give the stock a much larger runway higher. That's why I'm calling this a potentially huge opportunity. Not because I'm assuming CPRT is going straight back to its highs. It still has one major level left to prove it can break. Now, let's talk about Broadcom. Last week, AVGO was around $400, and I was waiting for confirmation before adding. The reason was simple. I already owned about 1/3 of the position I eventually want. So if I was going to add another third at roughly the same price, I wanted the chart to give me something more. I wanted confirmation that the reversal was actually starting. That confirmation never came. Instead, AVGO kept falling, and this week it reached $368, about 10% lower. At that price, the setup changed. On the weekly chart, AVGO has now pulled back to its 50-week moving average, and historically, that's been a major support and trend level for the stock. Then, when I move down to the daily chart, that same area also lines up with a major support zone. You can see this zone acted as resistance several times before. Here, here, and here. Then, once AVGO finally broke above it, that same area started acting as support, here and here. So when I put the two time frames together, I have the 50-week moving average on the weekly chart and a well-established support zone on the daily chart, both pointing to roughly the same area. And now I'm getting the second part of my position about 10% cheaper than I could have bought it last week. That's why I bought 11 shares at $368. That doesn't mean $368 has to be the bottom. AVGO can absolutely go lower. I now own 21 shares total, so I still have roughly the final third of my planned position available. And if AVGO eventually falls toward the deeper support area I'm watching around $295, that's where I may consider using it. Even though I put new money into CPRT and AVGO this week, that doesn't mean I've become less cautious about the market ahead. Those were selective opportunities. My broader market view hasn't changed. Last week, I was already cautious because of the midterm election setup and the VIX sitting near 14. And this week, I actually became more cautious because of what happened in the bond market. Long-term Treasury yields moved sharply higher. The Treasury announced it would double the size of its buybacks of longer-dated government bonds, which initially pushed yields lower. But that relief didn't hold. Yields started moving higher again. I'm not saying that means a crash is coming, but it gives me another reason not to confuse selective buying with a green light to become aggressive. I bought CPRT. I added to AVGO. But when I look at the broader market, I'm still protecting the cash I have left. So now you can see why I'm still cautious about this market. But I'm also willing to put money to work when the setup gives me a reason. This week, I deployed $5,328. CPRT earned capital because the trend improved. AVGO earned capital because the price improved. Two very different setups, but both gave me a better risk-reward than I had before. The trade-off is that after deploying that money, I now have only around $2,200 in cash left. And that changes what I'm looking for next. Going into next week, one of my biggest goals is to start rebuilding that buying power. Right now, CPRT is my only open options trade. So I'll be looking for short-term trading opportunities that can potentially generate additional cash and rebuild some buying power, but only if the right setup appears. But there's also one stock I'm watching very closely: Mercado Libre. MELI is now trading in an area where I'd actually like to start a fresh position. So that's the decision I'm heading into next week with. Can I find short-term trades that help rebuild my cash? And does MELI give me a good enough opportunity to use some of the limited cash I still have? Because with only around $2,200 available, the next dollar matters even more. Every trade is documented before the outcome is known. Subscribe if you want to follow the journey to $1 million in real time. I make the decisions. The market writes the ending.